Staying informed about contribution limits is important because understanding these limits can help individuals plan and budget their retirement savings, take advantage of tax benefits, and work towards achieving long-term financial goals. In this video, we're going to cover the 2024 contribution limits to three popular federal benefits, which include the TSP, FSA, and HSA. But before we discuss the new limits, welcome to the Money Briefing. My name is Jerrell Harvey, and I'm with Fedway Financial. On this channel, we cover topics related to personal finance, federal benefits, and retirement planning. So if you find this video helpful, please consider sharing and subscribing. Contribution limits refer to the maximum amount of money that an individual can contribute to a particular account. These limits are typically set annually by the IRS to regulate the amount of tax-deferred or tax-free savings that a person can build up each year. Even though increases are not guaranteed every year, recent high inflation has led to higher contribution limits over the past few years. In 2024, the contribution limit for the Thrift Savings Plan will increase from $22,500 to $23,000. And if you're age 50 or older, you will be allowed to put away an additional $7,500 in catch-up contributions for a total of $30,500. This chart shows how the contribution limits have increased each year between 2021 and 2024. When compared to other recent years, the $500 increase in 2024 is the smallest increase in dollar amount. It's important to point out that the maximum contribution amount is the combined limit between the traditional TSP and Roth TSP. However, the annual limit does not include any matching dollars from the federal government. One other thing to note, although it's not a federal benefit, the contribution limit on IRA accounts will also increase by $500 in 2024. It will go from $6,500 to $7,000. And if you meet the age requirements for catch-up contributions, you can add an extra $1,000 on top of that for a total of $8,000. Now, let's pivot and talk about the flexible spending account and health savings account. Both of these accounts are tax advantage savings accounts where you can set aside pre-tax money through payroll deductions to help pay for qualified medical expenses like co-pays, prescriptions, and many other out-of-pocket expenses related to your health or well-being. In 2024, the FSA contribution limit is slightly increasing to $3,200. There is also a use or lose component to the FSA because there's a limit on how much money that you can roll over into the next plan year. Therefore, it's important to estimate your expected medical, dental, and vision costs before setting your allotment. In 2024, the carryover amount is getting bumped up by $30 to $640, but the rollover is only available if you stay enrolled in an FSA for the following plan year. Any saved funds above the carryover limit will be forfeited. To contribute to an HSA, you must be covered under a high deductible health plan. Your HSA is funded through a combination of two sources, which include a premium pass-through from your health plan and your own individual contributions. Between those two sources, the maximum HSA contribution amount in 2024 will be $4,150 for individual coverage and $8,300 for family coverage. If you're at least age 55 and until you start Medicare, you can also make a catch-up contribution up to $1,000. One of the unique benefits of an HSA is the ability to carry over any unused funds from year to year. So you don't have to worry about losing money that you don't spend during the year. HSAs are also portable, which means the funds are yours to keep no matter if you change plans, leave federal service, or retire. I also want to mention that you can't contribute to an HSA and a traditional healthcare FSA in the same year. However, HSA holders can use a limited expense FSA for dental and vision expenses and a dependent care FSA for child care costs. The contribution limit and carryover amount are the same for the limited expense FSA as the normal healthcare FSA. On the other hand, the dependent care FSA maximum annual contribution limit remains at $5,000 if you're married and filed jointly, or if you filed as single or head of household. That amount is split into half to $2,500 if you're married and filing separately. As I mentioned at the start of this video, staying informed about contribution limits is important for effective financial planning because it can help you maximize your retirement savings while taking advantage of tax benefits. If you received any value from this video, please click the like button. You can also subscribe to our channel to get more content like this. If you're interested in seeing how we help our clients at Fedway Financial get the most out of their money and federal benefits, be sure to visit us at www.fedwayfinancial.com, or you can go to the description in this video to schedule a consultation. Thank you for watching, and we'll see you on the next Money Briefing.